Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Um, First off, just want to say thanks to those of you guys that stuck around this night for our option session. We had it was a pretty long night. We went over a lot of different things. I mean, not only like what's going on in the market and earnings, but we talked about butterfly spreads and we talked about boxing options. So a lot going on. If you do have any questions, please do not hesitate to reach out. I mean, if there's something you want me to like walk through even further, I'm happy to do that. So definitely just reach out. All right. Um, One of the things earnings wise that I really want to stress right now is that it's all about risk reward, right? If the options aren't being rewarded, then either your risk needs to be low or it needs to be not a risk, right? Meaning like you should not be taking earnings trades if the earnings trades aren't getting rewarded, right? I mean like that's kind of what it comes down to. It's like if you want to be rewarded for your risk you're taking on and if you're not getting rewarded, then you shouldn't be taking the risk. That being said, it's earnings season, and a lot of us, myself included, we want to trade earnings. I mean, there's still some really good quality setups out there, right? And they seem like there's a lot of potential, whether it's option pricing wise or technical, base chart wise. I mean, there seems to be some really nice setups, especially this week. So I want to take shots, but until you see more consistent action across this like earning spectrum where like I want to see like good numbers get rewarded, I want to see bad numbers get punished, but until that happens we're keeping the risk low. And I mean I've talked in videos just recently about how going about that, but one of the other ways that I'm doing it too is like trading earnings where I have maybe a cushion already on the trade. And what that means is like CVS, right? So this was a swing trade that was open um, not too long ago, and part of the reason why was because the setup was pretty good. The stock was acting well. It was like chopping around above 75. It looked like it was going to break out, and I knew that earnings were coming up, so I thought there was a good chance that it could maybe make a run ahead of time because last quarter was good. Healthcare names have been acting great. CVS was sitting right underneath a huge multi-year level of resistance, and it just seemed like it could work higher. So, what ended up happening is it was chopping. Then all of a sudden, the last like week, it really started to take off. And then they reported this morning, but what you'll notice is that yesterday had a really nice day, and what that allowed us to do was to roll up risk, meaning like we were able to lock in some money, roll up to like lower debit contracts, and take some risk out of the trade, right? So yes, options I held into today, they were still at risk of getting hit if the stock dropped, right? But having been able to lighten up yesterday when the stock rallied and roll up to like tighter spreads, right? Take some money off, reduce your cost basis, maybe reduce your overall net risk into the trade. So you have this little like cushion, right? So if the options did get hit, it's like maybe you rolled up enough to make sure like net you're only coming out flat, or maybe it's if it does drop, maybe it's just like a smaller hit, right? Or maybe you're able to do it where even if the options expire worthless, you rolled up enough to make money net on the trade, right? But this is what I mean with like trading with the cushion, right? It's like focusing on the good setups, looking for those ramp into reports, and when they start to move, right? Make sure you're cutting risk, locking in money, and like what that does is it'll give you like a little bit more of like a cushion going into these earnings. Where if it doesn't go in your favor, then maybe the overall hit is lower. Maybe you're able to manage it so net you're only coming out flat, or even maybe net you end up making some money because you're able to roll up and lock in enough money to like finance like the entire trade, right? Um, CVS, we were able to roll up yesterday, and then it actually ended up working really nicely today, and we were able to sell more into strength. But I just want to reiterate that there are still quality setups out there, but it's just managing risk differently, right? It's either ramp into the reports, it's sympathy plays, it's post earnings trades. It's all about getting risk down right now, and once the rewards start to get better, and once the moves start to get bigger, then we can open up the risk parameters. All right. So if you like this video and you're looking for more information on trading earnings with options or more information about this risk management, which I'm talking about, please follow up with the link the description of the video for more information on options in play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.